the most visible face of this particular capex cycle that is panning out, and probably the biggest also. But at the same time, there are many other things which are driving this whole physical rebuild. And India, initially, of course, India, the popular narrative is that India is an anti-AI play. But what my contention is, it is not an anti-AI play. It's just that AI might not have representation in the indices at this point of time, but below the surface, there are enough and more second order stories of AI that we can play. So we might not have the frontier models of,
LLMs.
no, from GPU, servers, memory, those are not the areas in which we are competing. But if you look for, cooling solutions, switch gear, data, cables, connectivity to the grid, those are all still good 30-40% of the overall AI capex build. Now that private sector capex cycle, what I am saying is that because of this AI build out, that it is well and truly the global tailwind in the industrial capex cycle is going to help India as well. And we are already seeing initial signs of the kind of credit growth and everything that is picking up in India. So, but I think it will accelerate further. So just to summarize, there's a global industrial capex cycle playing out because of the change in the world order, which is going to play into an economic revival in India, where the baton changes from central government to private sector, where they will carry on the global capex cycle, the private sector capex cycle further. And for that, the missing piece was the confidence, and that confidence seems to be coming back. So there are second order beneficiaries of AIs, and I think market is not yet realizing that this is going to be a prolonged cycle, synchronous cycle. The overall build out is going to happen because it is indiscretionary in nature. It is not only based on economics. It is based on the fact that US needs to maintain its superiority in technology race, and it is also driven by the fact that at company competition level also, you need to be ahead of your competition because it's not a choice anymore. So that is what gives me a lot of confidence that this cycle is not going to get over.
The other thing, Ravi, that you were mentioning was that the government has to do enough for the private capex to kick in. If I look at the quality of balance sheets of banks right now, NPA ratios are down to 2.25%. Credit growth is back to 17 to 18 odd percent. Is this the time when you will finally see private capex pick up? Because if we miss the boat now, then it's going to take a long into coming.
Yeah, so I think in fact, I believe that there has been a 2-year delay. The capex intensity of central government peaked in 2024, and the private sector capex cycle is picking up now. So there we had a 2-year gap. While what panned out in the previous cycle in 3 to 8, there was a nice transition. The capex intensity of central government led in 2001, 2, 3, 4. Suddenly in 2004, government changed. Now, because of the change of the government, the capex intensity might have not slowed down, but the consumption also picked up. And that led to the cycle getting elongated, and there was no interval in between. But in this cycle, what we have seen is the last 2 years that there was a little bit of slowdown. Why was that? Because in 24, when the elections were there, at that point of time, 5-month period where the central government could not spend money. Now, after that, now the government is getting more and more constrained, whether it is the state government or central government, their ability to spend. They grew from 2020 to 2024 almost at a 25-30% clip. Now they can grow at 10-12% clip. They cannot continue because the base has become much higher.
Larger, yeah.
So from 6 lakh crore annual spend, we have come to almost 12 lakh crores. Now from 12 lakh crores, we can grow 10-12%. So now if we want to push the GDP envelope to 8% or beyond, then the private sector capex cycle has to pick up, which is picked up, but it is still at 10-12%. We need to see private sector accelerating at 20-25%. And if that happens, then we will see the GDP also flowing and growing at 8% or so.
But Ravi,
and the
to
conditions are there.
Over there, is this entire AI boom which is playing out across the world, is this going to finally be that catalyst for private capex to pick up?
Yes, absolutely it is.
Okay.
So in the 20 gigawatt capex that is announced as of today in India, roughly half of it is the hyperscalers, which are the US guys, and roughly half of it is the top conglomerates of India, those who have announced, the Tata, Adani, Ambani, Jindals, those are the guys, so, and their balance sheets are not a problem. They can get funding. As of today, cost of money is also not that high. So the conditions are there for the private sector to pick up the gauntlet and announce. And we are already seeing anecdotal evidence of it, announcement. So we track a lot of announced projects, which later on where the those announced projects have converted into on-ground action. And we are seeing that bucket that already there is pickup in activity. Now this will start reflecting in the capex numbers, probably 27 or 28 numbers, where you will suddenly see that those announced projects have started getting commissioned, and that is where we will see that even the demand for credit and all, probably which is 17-18%, has the potential to go into 20% plus as well. So I remain very hopeful that the India's private sector capex cycle is about to pick up.
But Ravi, as
accelerate, not pick up. Let me put it.
Yes, accelerate to 20 to 25%. But as an Indian investor, is the message don't bother about what the Nifty is doing, because that's a function of what banks and IT are up to, and that may not be the true picture, because all these AI beneficiaries that we're talking about are in this mid space.
Yeah,
should Indian investors look at it as a more stock-specific, company-specific story, as opposed to being an index heavyweight large cap led story?
Unfortunately, Nifty is a lagging indicator, and it will follow. There will be changes made in the indices over the next couple of years, where some of these new, well, they are not really new age industries, but industries which are becoming the new center of focus, where the earnings expansion, profit pools are getting created. So these, you will see renewable energies becoming part of indices, defense companies becoming part of indices, semiconductor value chain, all power grid, all those kind of companies will become part of the indices. But unfortunately, they will be lagging indicators. They will not be leading indicators. On the other hand, the banking and IT were actually a drag on the index. I think IT is initially it is going to be at the receiving end of this AI revolution, because Indian IT industry's business model is essentially labor cost arbitrage, and it is based on time and material. Now, if a guy in US could do it for $100 an hour, a guy in India can do it for $20 an hour, and now AI can do, if instead of 10 people, 2 people can do it, and at almost half the time and 1/10 or 100 the cost, then obviously that business model is going to face a challenge. But having said that, probably there is a 3-4 year transition phase. After that, AI enterprise and services around it will become large enough portion of the revenues of these large IT companies, and that will also show growth. But I think that's a story for the phase 2. Today, they are a net negative impact of AI. I very strongly do believe that and all the acquisitions that we are seeing in the IT space are essentially to buy growth, and that is not going to buy growth, because you are buying to just stay in the same space, and you will see that the revenues roll off much faster. So that is the negative side of AI story on India. Banking has been having its own challenge on the NIMS front, but I do believe we are reaching a phase where NIMS are also going to bottom out. Asset quality is not an issue, and growth, now there is a very benign regulator that is pushing for growth. So all three, the troika of NIMS, growth and ROE expansion is going to happen, and that means and also the relative valuation of Indian financials versus the global financials has become very attractive. So I don't see fundamentally them correcting a lot more from here. Money should start flowing in, and so maybe Nifty will also start participating soon enough. But right now it seems more like a value call rather than a growth call.
But Ravi, you've always talked about the layer 1, layer 2, layer 3 framework, right? When you talk about this physical rebuild led by AI, classify where does India lie, and where do Indian businesses lie in these entire three things?
Layer 3 is where India's story starts, which is essentially connecting that GPU to the grid, or cooling it down, or the civil construction around it, the EPC players, the components that go into each of those things. So The layer 3 is where India is going to play, at least in this particular cycle. Can we at some point of time hope to have our own LLM and become cutting edge in semiconductor? Maybe, but that is not the next 5-10 year story.
You know, you've also highlighted that India is very uniquely getting a domestic cyclical story in place or recovery in place and a structural global tailwind also at the same time. If I were to ask you, give me one sector that captures both of these tailwinds in one go, which one would it be?
Domestic capex cycle as well as a global.
Yes.
As I mentioned, so I think the bottleneck, you have to figure out where the bottleneck is, and that bottleneck will tell you where the opportunities are opening up.
Understood. Where else in the market do you have this kind of conviction, I'm wondering, outside this sector?
Aerospace, defense, entire semiconductor ecosystem is still coming up. Energy transition, within energy transition also there are changes happening. Earlier on it was only solar module manufacturing, then cell manufacturing, then it is going to go to wafer. Companies are diversifying into hydrogen, batteries. Batteries is going to be the next thing, because if you see last year, we saw almost 50% of the power generated through solar in Rajasthan could not reach the grid. Then we might move to hydrogen, because hydrogen is also a next big play in the energy transition. Electrification of EVs. I think we have just embarked on the two-wheeler electrification. The PV electrification is still ahead of us.
Ravi,